Central Bank Governor, new mechanism for financial transfers to Turkey in euros launched. The amount of coordination that must be ongoing behind the scenes must be intense now. Mr. Sami, from what he's gathering and hearing in the rumor mill, the currency swap out will be in November, but it's not official. He's not speaking for the bank. But what he's hearing, he's thinking this is pretty good. Prime Minister Mohammed Shia al-Sudani confirmed from New York that the currency sale window will close at the end of this year, while revealing the government's intention to establish a new bank that adopts the latest technologies. Wow! Wow! We have been waiting for this for decades. Now it is reality. Finally. The Central Bank of Iraq launched its financial transfers to Turkey in the euro currency. This means the business with Turkey, primarily the pipeline that was halted in March of 23 due to illegal usage, is now opening back up with transfers in euros. Add this to the Iraqis receiving their salaries from Jan 24 to August 24, we are in for great celebration with the rate release. I now have 2 bankers/redemption folks who say they will be working this weekend. One of them said they are making new system software updates, while the other one says they are preparing for an influx of new wealth management clients this month. Iraqi Dinar under pressure amidst regional tensions. They hid in this article a piece that we really like. They are shrinking the dinar note count, which will increase the value. If you're going to create value, you're going to have smaller denomination, and you likely will have to have coins. There's no need for coins if you do a LOP. There's none. They will not ever do that, and the reason why is because how in the world could you get by with a 1 note and the value of it at 0.0007? Come on. The security and stability of the monetary reform of Iraq is at its pinnacle, and it is going to protect this new exchange rate, and the new lower notes. You put a mic in front of these parliament politicians and they instantly become economic experts. This is basic math. The Central Bank of Iraq warns exchange companies against receiving a commission of more than $25,000 from selling the dollar to travelers. Next, you do not need an army or team to help you handle your money. You need only find a reputable asset protection firm or attorney. Doing it this way eliminates wealth managers, lawyers, CPAs, investment counselors, etc. The asset professional will usually have an in-house CPA. What exactly are you doing anyway? You are eliminating all 3 wealth killers. Those are lawsuits, taxes, and estate planning. You will pay minimum taxes, and mitigate taxes, lawsuits, and estate planning. This will ensure that you get wealthy, stay wealthy, and pass your wealth on to your heirs without probate, estate taxes, death taxes, or capital gains taxes. Economic expert Nabil Al-Masoumi expected on Friday that the price of a barrel of oil would rise to nearly $200 if the war in the region expanded to include the Gulf states, and Iran closed the Strait of Hormuz and cut off the flow of about 20 million barrels of oil to global markets daily. The expert spoke in an analysis published today about the 2 expected possibilities regarding what he called the coming oil war. He said that the first of them is that Israel will target the Iranian oil export outlets, especially Karg Island, through which 90% of Iranian oil exports pass. This means eliminating 1.5 million barrels of Iranian oil from the market, which will raise prices by about $5 per barrel to $82. He added, but it will lead to cutting off the most important sources of Iranian funding, and in this case we will face several scenarios. The first is that OPEC Plus will intervene and cancel voluntary and mandatory production restrictions, which will provide sufficient oil supplies to compensate for the loss of Iranian oil, indicating that this will lead to a decrease in prices and their return to the $70 mark. He addressed the second possibility, saying, the war may extend to include oil pumping and export stations in the Gulf, which may negatively affect Gulf oil exports, especially Saudi oil exports, which will push oil prices above $100 per barrel. Al-Marsumi also pointed out that Iran had previously confirmed that preventing it from exporting its oil to the world also means preventing the exit of oil from the Strait of Hormuz. If Iran closes the Strait of Hormuz, this means cutting off about 20 million barrels per day of global oil supplies, which will push prices to $200 levels, in addition to negatively impacting Gulf gas shipments that pass through the strait. The Iraqi economic expert continued by saying that the Israeli strike will be limited to hitting oil facilities, especially Iranian refineries, which means taking out 300 to 400,000 barrels per day of Iranian exports, noting that in this case it will have no significant impact on global oil prices, especially after Libyan oil returns to its previous levels.